Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, June 9th, 2016. In this video, I wanted to take a look at the real estate sector, the REITs in particular. This is the IYR, the Dow Jones, iShare Dow Jones U.S. Real Estate Index ETF Fund. REITs, for those of you not familiar, real estate investment trusts, are bundled up. It's technically a stock or an equity, and what they do is REITs invest into commercial real estate. Now, it can be all types. It can be shopping malls, residential properties such as apartment buildings, um, hospitals, self-storage units, you name it. So there's really within the REIT sector, there's a lot of subsectors or different type of commercial real estate that they invest in. And the REITs typically pay a pretty healthy dividend, anywhere from, depends on the company, 2%, 5%, sometimes higher, but usually around 3, 4, 5% on most REITs if they're healthy. By that I mean if you look at something and you find a REIT that's paying 12, 15%, there's obviously some fundamental issues there, and you're taking a risk because there's no reason for anybody to pay out many times the market rate on a dividend. So high dividends are usually a function of a low share price, and it means the dividend is usually questionable, could be cut. So stay away from those super high dividend yielding anything, whether it's a REIT or any other security. If you see a double-digit dividend in this interest rate environment, just know that either the share price and/or the dividend is not secure on that. All right, enough of that. Let's take a look at the charts here. Now, what I wanted to, before I dive into the individual charts, I wanted to mention that I'm going through the individual components of the real estate, the DJUSRE, Dow Jones US Real Estate Index, because I see a mixed bag of technicals. Overall, I see more bearish than bullish patterns, but I do see quite a few REITs that have already come down, had healthy corrections, they're at support. There's even a few bullish looking charts. So this is one instance where I don't think that the shorting the actual sector itself, the IYR or any of the leveraged ETFs that track the REIT index, is worth it, because there are, again, I've gone through dozens of these names looking at the charts, the individual components, and for every 3 or 4 or 5 that I look at, I would pass. In other words, I don't think they offer very objective short entry, but then there are some standout candidates. So I think this is a case where out of the entire sector, if I were to pick my top 10 or 12 picks and short those, that I will greatly outperform the index itself. Whether the index goes up, stays flat, or even moves down, I think those stocks will all go down more, if that makes sense. So this is IYR, not a very clear chart to me. Let's just focus on the recent price action. Look at the RSI and the MACD down here. You can see we recently, at this point, up at the highs, put in a divergent high, strong divergence. Most I put a lot of weighting into these divergences, especially when viewed on the daily time frame. More often than not, they play out. You go back for a long time, you don't see. This wasn't negative divergence here because that was not a higher high. This was negative divergence with prices making higher highs versus the indicators making lower highs, and then boom, you already had a sharp correction. Now it's pushed back up, the IYR, and we have this uptrend line here, and my expectation is it'll probably break down again, this minor uptrend line, I like to call it. I think it'll break down soon and probably take us back down to those lows that we were at, this trend line here, and possibly beyond that. But again, there's too many charts that within the sector that appear likely to hold it up. And again, in addition, these stocks pay dividends. So if you're swing trading for a long time, you're going to have to pay that dividend if short the individual stocks. Now, most of the swing trades I'm looking at, or like typical swing trades on the site, are probably going to last anywhere from a couple weeks to a couple months, sometimes 3 months. Maybe a little bit more. Again, it depends on the individual trade. And you're talking a average dividend yield probably somewhere in the area of 3%, and that's annualized. That's an annual dividend rate. So if you hold the stock for a quarter, you pay less than 1%. It's not a big deal, especially if you're targeting double-digit returns like most of the swing trades that I do. 10% or higher on average for the gain potential in these trades. All right, let's get into the charts here. Before we do that, I'll flip to DJUSRE. The reason I'm doing this, that's the actual index. IYR tracks this, and this is the index itself. Now on the left, to the left of the screen, I just pulled it over here. I have my related items. So for whatever reason, TC2000 doesn't populate the holdings of IYR. It does with most ETFs, but in this case, I had to enter the actual index, and that populates all the holdings. And I've ranked them or sorted those by market cap here with SPG, Simon Property Group. That's the 800-pound gorilla in the sector. It's the largest component of IYR. And as such, the charts look almost identical. There's that same divergent high in Simon. You can see it there, just like we had on IYR. You'll see the charts, like I said, usually mirror themselves. Here's that next thrust up. Sort of looks like a large. It's a little too large to be a bear flag pattern, but the essence of the pattern's the same. You have a pretty well-defined uptrend line. So I think on a break of that. Now, Simon's not my favorite short. Let me make that clear. I wouldn't short Simon. Do I think it's going down? Yes, but I think there's better risk reward on most of the other trades that I'll cover today. So either way, if that plays out, then IYR will almost certainly do the same. And let's dive into the charts I do like. I'm doing this also because I can't, there's so many trade ideas in the REIT sector that I can't possibly list them all as official trade ideas, because official trade ideas are always followed up on. They always have charts and notes as targets are hit, or for trade updates. I put a post up on the front page, and all that takes a while. And then when the trade finally either is stopped out or hits the final target, it's removed with an update. And to do that for a dozen or so stocks in the REIT sector, it's just too many official trade ideas. So official, unofficial, doesn't matter. These are the trade ideas. You know, there's a lot of these official trade ideas, or unofficial, I should say, on the site, and they do very well. I mean, somebody was talking to me today about Bombardier, which is, here we go, class B. And this one was covered just recently in my favorite long pick trade ideas on a break over this level. We had a breakout of the back test of this downtrend line. Perfect chart. And, you know, I stated really liking it at the time, and that was at 145 is where that level was. So from there it broke out, and just about 2 weeks or so it ripped up, you know, almost 58%. Fell just shy of that last, that was, I said, my final target there, and now it's hovering around that $2 level. So, you know, that's one of many cases of these unofficial trade ideas. They're out there, and again, sometimes there's so many charts, so much I see, I don't have time to put each and every one up as an official trade idea and track it. So it's up to you to, you know, pass on what you like, and or pass on what you don't like and take what you like, whether it's official or unofficial. And as always, with the unofficial trade ideas, it's easier for me to pump those out because I don't have to list explicit stops and price targets and everything else. With that being said, if you're a member of the site and you like one of these, and you want to chart additional notes, you want a suggested stop or target levels that I didn't specify in a video or up in a static post or something I mentioned in the trading room, by all means, just drop me a line, whether in the trading room or, you know, via the contact form, and I'll do my best to get some charts and targets out to you. Okay, enough digressing. Let's get back to the charts. So we started with Simon, and again, I'll go through these in order. I'll take that off to the left of the screen here and go down from ranked by market, or sorted by market cap, with Simon being the largest company within the REIT index. Now I'll go down the line, so we'll go in descending order. Here's AMT, American Tower, number 2. This one just had a tremendous run. Now it's working its way up in this sort of ascending price channel. There's potential divergence, not confirmed. By confirmed, I want to see this MACD roll over, do a bearish crossover, and turn back down. That will be confirmed divergence. Until then, you know, anything can happen. You know, I've drawn what may be an upper trend line, which would form this parallel price channel. However, there's not even a second reaction. We haven't even had a reaction there yet. So what can happen? This could morph into an ascending, broadening wedge pattern. It would look like that, move up higher. That also has the potential to, these divergences would stay intact up until the point the MACD makes a higher high. So I'm pretty sure from the look of this chart, very likely this thing will roll over before these divergences are burned through, but they can be burned through. So in other words, to short it here, you're just taking a pot shot. There's not any signs of a reversal or a sell signal. There's not, you could, I tell you, the only two ways to get an objective entry. Now you can take a shot here if you want to just put a stop. Let's say your loss tolerance is 3, 4, 5%, 8%, whatever it is. You could certainly short here with just a flat percentage. There's not any resistance overhead because the stock's at a 52-week high, and so there's nothing to the left of the chart to show us resistance level. So you just have to place a stop and then hope that it reverses, but again, not the most objective entry. Break of this trend line would be objective. Something else, say a bearish engulfing candlestick or some other type of candlestick reversal pattern. But again, this one has potential. Maybe it wants to wedge up like this. So just something to keep an eye on. Put it on your radar if you like it. And short a breakdown of that wedge. This would be your first target, this trend line. Second target, there's horizontal support there. I'd say really come in around 103.50 all the way down to that 102 level. All right, let's move on. I have a lot to cover here. PSA, this one, I've watched these for a few days. Should have mentioned this one earlier. There are actually quite a few that I should have mentioned earlier, but that's why I'm doing the video, to get it out here now. So this one, you can see a very nice uptrend line, breakdown, and impulsive selling. Everything you want to see on a breakdown to confirm or validate that trend line, and that's what happened here. So now this one right now would not be the most objective short entry because you have this, see this gap back here. This support zone is defined by this gap as well as this reaction high at the top of the gap. So the top of that gap, 240, 245-ish would be your next support level. If and when that goes, you have the bottom of the gap that could act as support. But beyond that, and I expect that level to go, just looking at the pattern, ultimately the stock probably moves down to 226.11. So maybe put a buy to cover order at 226.50, maybe at 227 to be safe. And but I wouldn't bring it to a full position until this level breaks down. Maybe a bounce off that level. You could short a retrace back up to that. I think that 249 area would be a pretty objective entry because there's some resistance there. But right now you're in no man's land, so just one to watch. CCI, yeah, it's looking strong. I wouldn't short it. PLD, there's an uptrend line to watch. Again, nothing, potential divergence, but it's not confirmed. That stock's still moving up. So again, this is the reason why I wouldn't be shorting IYR right now either. There's too many strong charts, but the potential for a reversal, but it's not there yet. You need that technical evidence. And with PLD, you want to see ultimately a break of this uptrend line. HCN, nothing there. GGP, messy chart. EQR, here's one that's closer to a bottom than a top in my opinion. It's already corrected from the highs just a couple months back, or earlier this year I should say. That one's dropped over 23%, and it's coming up on this reaction low. So you have support on the stock not too far below. So again, there's one, not a lot of meat on the bone. I wouldn't go long either. Some potential bullish divergence forming, but I just not crazy about it. WY, potential downtrend line. It's some, we've only had 2 reactions on it. And that one needs to break this level to really get going under 30. Not my favorite, but one that if it does break that $30 level, I think it's a pretty good shot. It's going down here to 29. It's a 1-point drop, not huge, but on a $30 stock, a full point is a pretty decent move. And then there's next support on that one would be that other gap down here, 28-ish. So it's pretty even numbers. Support at 30, first target 29, second target 28, and then probably ultimately down here 28.80-ish. Again, not one of my favorites, just something to point out. AVB, Avalon Bay, that's on support. It put in a divergent high, as it did in the past. You see all these other divergent highs that I've marked here, and you can just see how well these things play out for corrections. And you know, this is every divergent high that it's made in the last 2 years. So correction, and these are sizable corrections. So that one's already corrected quite a bit, and it's at support. I do think it probably heads down, ultimately down to this level here, but not enough meat on that bone, so I'd leave that one alone. All right, moving on. VTR next. Okay, this is VTR. Very steep uptrend line, wedge type pattern, breakdown that just ramped up afterwards. Probably a lot of short squeeze there. There was divergence at the high, and there's even additional divergence, what I call double divergence at this point from that previous reaction high right here. You can see it's not drawn out yet, but I'll put that down here. So now the stock is at least potential divergence because the MACD is still pointed up. So actually, let's get rid of that line. And, well, I have my screen draw tools in the way. Let's go down here, delete, there we go. We'll just extend that line. So that one needs to turn down. The MACD needs to roll over. The stock needs to roll over. Obviously, if the stock price turns down, then the MACD will roll over, put in that second divergence, and then you have a stock that's probably poised for a pretty nice drop. You can put this alternative uptrend line right there. I would leave out that red candle because we whip back up. This would be the level to go. In fact, I'll set an alert on that one right now. Where's it going? That one first stop will be 64.44, so you'd want to buy to cover just above that 64.50 and change, maybe 64.52, somewhere around there. And ultimately, that one has a good shot of going down this far. The steeper the wedge, the harder they fall. That's how it works more often than not. So 59.66. Cover a little bit above that. That would most likely be my final target. We'll just have to keep an eye on the sector and this individual stock, see how it works out. BXP, nah. VNO, nope. HCP, nope. Realty income, symbols O. Potential head and shoulders, that's what I have here with these lines here. Left shoulder, head, right shoulder. Now this right shoulder is getting a little long in the tooth. It shouldn't, symmetry wise, you don't want to see a right shoulder match or certainly not exceed the distance up to the head. With that being said, it's really the essence of the pattern. If you have an impulsive move down, now this stock would have to turn around almost immediately. It cannot go up anymore, or that symmetry will be completely busted. It's already in question right now, but what you need to see is an impulsive move lower. By impulsive, I mean similar to what we had here off the left shoulder. You see these two big red candlesticks, 2 single days price action put in that left shoulder, almost the entire left shoulder. That's impulsive selling. Off the head, we had 2 big red candlesticks and then a gap down. So that's 3 days of very impulsive selling. You need to see that on the right shoulder in order to finalize that pattern. So how do you trade this? Well, the safer, higher probability entry is wait to see that at least some decent evidence that a left shoulder or right shoulder is in formation. In other words, impulsive selling, big red candlesticks, ideally on increased volume. Most people only will short head and shoulders patterns once they're fully formed and they trigger a breakdown, which is below the neckline. That's this line right here. The distance from the head down to the neckline, that would be your measured move, and you add that to where the pattern breaks. So assuming it breaks down right here, that gives you a measured target around 51.90, although I see some really decent support around 50.90, or call it 51. So my target would be somewhere in that area, the $51 to $52 area, if and when that happens. So here's a case of a what I call an excellent RR, risk reward ratio, because if you shorted right here at 64, your stop would be just above those recent highs around 64. So you're talking about, let's say, 70 cents downside for, let's get that out of the way, for as much as 12, almost 13 points on the downside. So an excellent RR. Although this one's still heading up. Now, the way it works is when I see these outstanding risk reward ratios, I usually like to target a 3-to-1 or better RR. So 3-to-1's good, 4-to-1's even better. When you set some crazy, excellent risk reward like this, that the trade-off is more often than not, the probability of that trade playing out is much lower than the 3-to-1, 4-to-1 RR trades. Now, what I mean by that is there's a good chance if you shorted here, you're going to be stopped out at 64, or a better chance than most trades. So your failure rate is higher. However, the gain potential, if correct, is very large. And that to me is sort of a wash. It just depends on your trading style. Better off, I just say this. Personally, I might take this one, but I won't short it right here as the stock's still going up, especially on a down day in the market like today. I don't want to see some type of reversal, maybe a bearish engulfing candlestick or some other type of candlestick topping pattern or reversal pattern. And I need to see that soon, as I said, or otherwise, the symmetry is already in question, but if it definitely goes up much more, then forget about that pattern. So, but I didn't mention it, although I'll point it out here. from into the highs, there was nice negative divergence. And yes, did that divergence play out? It played out for a little bit of a correction, but not when I'm talking multi-month divergence like this. I'm looking for a bigger move. So again, I think this one has promise, just needs a little work there. DLR, that one's gone parabolic. That's why I have two trend lines. If I had a parabola to put on here, I would do it. If you put it right here and you have a curving, nice upward sloping line, that is the definition of a parabolic move in a stock when it has an increasing slope like this. Um, that's a log scale too. If you take it off the log scaling, it's even more pronounced. So anyway, you can't touch that one. I don't see divergence. What a fake out move. This is probably a short squeeze. Look at that doji right there. You see that beautiful doji? That was also an island top. Beautiful textbook island. This is from my experience, one of the most reliable topping indicators. When you see an extended uptrend like this, you have a stock that gaps away and then gaps back down. That's an island top pattern right there. Beautiful textbook, especially with a doji. But look what happened. Thank God I didn't see it at the time. That sucker only went down for a few days, confirmed that, probably ramped up the bearishness and the short interest in the stock for anybody watching it, and then turned around and was able to take out that gap. So you can see what happened. It walked up. At this point, it was just testing the gap, and then look what happened. Right after that gap was taken out, which negated the whole island reversal pattern, boom, 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 boom. This right here, my friends, is a combination of short covering as well as opportunistic longs that are taking advantage of the short squeeze, knowing that people probably shorted at this point, squeezing those shorts out. And my guess is they're probably pretty much squeezed out now. I don't think that stock will probably go up a lot more, but I wouldn't touch it. I don't see any evidence to short it. I just wanted to point that out sort of as an FYI kind of thing. ESS, it's at support right now. Decent support at 207, so I wouldn't short that, nor would I go long. Stay away from it. KIM, Kimco, nothing much. I had a divergent high. It already corrected a little bit. You can see the divergence down here if I drew it. Actually, it extends quite a bit on the MACD all the way back to this point. As I'm looking at this, it might have potential. It's just a larger pattern than at first glance. We had that little fake down, although there wasn't really a reaction there, so that trend line hasn't been validated yet. So just a large pattern, something to watch. Let's take a look at the weekly chart. Weekly's not that clear. HST, don't see much there. EXR, here's a pretty well-defined trend line. Let me set an alert for that one if I didn't do so already. Nice, clean, bearish rising wedge pattern, negative divergence. So that one looks pretty good. Target support. I don't have this chart annotated yet all the way. Let's see. This would be the most likely target around 76.20. And if it takes that level out, I would put a second target right around here, 71.40. And if things get really ugly, it may continue down to that 64.83 area. I'd have to look at the weekly chart. Wow, look at that one. How would you like to put all your money in that in 2009 back here at $5 a share? Let's see how much this one's gone up. 1,000, roughly 1,700%. So, let's see. We do have divergence here on the weekly chart. From this peak in the PPO as well as in the RSI. So there's weekly divergence. I wouldn't short a stock just because it's gone up 1,700% in 6 or so years. That in itself is certainly not a reason to short it. Valuations. Well, here's a P ratio on a REIT, 54. That's very high for a REIT. So you'd have to dig a little more on the fundamentals. Dividend yield, 3.39%. That trend line is not my favorite. Let's just draw this. Yeah, this is the trend line I'd like to watch here on this one. Weekly trend line. And that one has a way to go if and when that breaks. So I'm going to set an alert as well on the weekly time frame. So you have a divergent high on the weekly. You have a pretty clear pattern here on the daily to time your entry. And it has a little support there that might come into play around 84 up to 85. Yeah, I would expect a little reaction there. But again, I think this one looks good down to any of these levels. That's EXR. Mac, well, there's one that if I had to be long or short, I'd probably be long. It's inside this descending triangle pattern defined by this downtrend line and this bottom line here. But until then, it's just range bound. So you don't want to be in a stock like this. You could sell covered calls, own it, collect the dividend, sell covered calls. That's what you want to do in stocks in a sideways trading range. You're getting the dividend plus the income from the calls. But these sideways trading ranges don't last forever. If you could have foreseen that back here, or maybe, picked up on it at this point, but what I'm getting at, you come as this triangle, this descending triangle pattern pinches down, the apex would be way off to the screen to the right. However, the range is getting a little tighter, and sooner or later, it's like a coiled spring, this thing will break one way or the other, but I don't really have right now an opinion on that as to where it's going. FRT, divergent high, it's not drawn out here, I'll point that out. So we did have a divergent high. We did have a correction already off that high, but there may be more to come. This would be your next short entry here, break of that trend line. We're also at horizontal resistance, so you could take a shot at it here, 157.30 with a stop a little bit above that 157.90, call it 158 level. Yeah, there were a few reactions through there, but I think that's a pretty decent area to quantify a very low, a very small stop. Again, the higher probability entry is to wait for a break of that trend line, and then you target this uptrend line. And if things get really ugly in the sector, it's probably going down to about 140. Okay, I just realized how long this video is going, so I'm going to stop it here. There's quite a few. I'm only just getting into all the names in the index here. But this one looks like a decent short as well. CBG, CBRE Group, symbol CBG. And what do we have here? We had a nice clean uptrend line, a breakdown, a correction that came right to this support zone here. You can see defined by this reaction low. There were some reactions in there. So it found support where it should have pushed back up. Now this push up is on a divergent high. The prices have made at a roughly equal high from the previous reaction high right there, if I put that trend line against the RSI making a lower high and the MACD making a lower high. The MACD is starting to turn down, hasn't yet crossed over. Your sell signal on this one would be a break of this uptrend line, which I expect to come soon. There'll be a little support there, but I think that'll bring CBG all the way back down again for at least for another test of this support zone here, the top of which is at 28 and the bottom of which is at 27.55. In wrapping this up, I'll just point out there was an article in the journal recently, Wall Street Journal, on the REITs. Interesting read. If you want to Google this term, just type it in just like this, REIT surprise, colon, how real estate crushed the stock pickers. And it just talks about how the REITs have been the best performing asset class in the market for the past 15 years. They make mention in the article, which I already know, just because something has been the top performer doesn't mean it will continue to be. In fact, there's a good chance that everything reverts, back to the mean. And I think the REITs will probably struggle going forward. And they talk about that too. Rising interest rate environment. We have nowhere to go but up on rates. Things like that. They hurt the REITs. Sluggish economy too. A turn down the economy hurts the REITs. So again, good article if you want to read it. And again, just Google that term, or if you have a subscription to the journal, go in there and you can find it. Okay, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.